day.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.
This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com.
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the gold futures chart. Just before I start today's video, as always, anyone who's interested in joining my free analysis group over on Telegram, then please do not hesitate to scan this QR code on your screen. But let's start here with the gold markets. Gold trading significantly higher this morning. This is due to some very welcoming news over from the UK that Jeremy Hunt, the new Chancellor, has just announced that he's going to be undoing all of the previous tax cuts that were announced by the previous Chancellor, who was sacked on Friday, of course, and this has now led to the 10-year gilt market over in the UK, so the 10-year bonds to decline rather significantly, and of course this has put pressure on the dollar, so hence we've seen the gold markets rally. Just to show you quickly, the dollar index, we are trading down 0.4% on the day so far, so nice little positive move here in the gold markets. But the big question is, does it last? We're currently trading in this triangle wedge pattern, and ultimately either the top or the bottom has to break. So I feel like we could be bouncing in here for the next week or so, but eventually we're either going to get a break towards the upside or a break towards the downside. So depending on where that break is, whether it is towards the downside, then we go straight down to the swing lows down at around 16.13. If we break out towards the upside, of course, we're going to find it rather challenging to break above 17.25 because that is the swing highs that we achieved last week. But if we can break above that, then I think that sends us up towards the 200-day EMA. What isn't positive for this market at this moment of time is that we have still got this downward sloping 250-day EMA, and I still believe, guys, that we are still capped when it comes to gains due to the fact the Fed is going to continue to be aggressive to try and combat inflation. That CPI reading that we got last Thursday is really not going to help the future of the gold markets here. So I'm a massive believer that until the Fed comes out and potentially suggests that there could be a Fed pivot, we are going to see the gold markets under pressure for the foreseeable future. Until we get that pivot, that's when we could see a huge rally in precious metals, as they have massively underperformed this year, especially considering that they are apparently a safe haven, because gold has not acted as a safe haven whatsoever this year. In fact, if we just pull it from the swing highs where we were trading back in February, this was only in February, guys, all the way up around 2076, we're down around 20%, which is pretty much the same as the S&P 500. So not much of a safe haven at all this year.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.